Thanks for taking the time.
Made it
Uh,
happen. Awesome. Yeah, excited.
awesome. Hey, Ben, um, my first question for you is if you wouldn't mind, just sort of take the microphone for a while and tell me about Jeff Mohajir and how you met him and, how you guys got to working with him and all the rest of it. And I think it's important because I know he's local to Kansas City. For those that don't know, we're all Missouri boys here. But I know that you known him for some time. This wasn't just he wasn't just some guy you found on the internet. And I think that story is really important.
Yeah. Yeah, exactly. We got interested in oil and gas several years ago, started investing in different projects, really because of the macro trends that you set out. I mean, that's it's pretty compelling when you see the supply and demand and kind of where the forecasts are going. We actually believe it's a generational buying opportunity right now. So then the next big question is how do we find the right partners? Because as we started doing more in this space, we realized there's a lot of, I don't necessarily say bad actors, though there are some of those. There's
Yeah.
a lot of unprofessional people in this space that are,
Yeah.
when oil and gas gets hot, people get excited about it and they go invest with these mom and pop operators who at best are just incompetent and sometimes are worse, where they actually uh, fudge numbers, exaggerate, and gross up, the fees, everything that they're charging to insane numbers. And we've seen all this stuff firsthand. So as we've been doing all this research, we've been making our investments. We get connected through multiple connection points of mutual friendships to this guy Jeff Mohajir and his firm, and we actually had him engaged him to do an appraisal on the geology of one of the assets that we purchased in another fund, and through that started building a relationship, um, and started meeting with him very frequently, and found out just the pedigree that he comes from. His father was the one that started the firm 40 years ago. Jeff is a trained geologist. Their whole background as a team is geology and engineering, and they were doing advising, consulting for large corporations to make decisions on where to drill, where to invest capital, and then eventually we're like, hey, we're pretty good at this. We should start our own funds, and that's kind of what started the whole track record which you showed. But from a personal standpoint, I'm very, very picky about who I want to work with. And
Yeah.
so we actually spent about a year getting to know each other. I did weekly meetings, coffee, lunch, cigars, those kind of fun things, but took it very slow and really built a relationship. And, that was before we even launched the fund a couple years ago. So it's been now, several years of working together. He is actually one of my favorite people to hang out with and enjoy spending time with. Um, it's been
He's
an
very
awesome partner, and obviously the track
yeah.
record speaks for itself, but the character, the communication, the transparency, the approach, all those things kind of come together and to me make it a great partnership. And to kind of round out, well, where does Aspen fit in the picture? The cool thing with how this all came together, which I didn't hear the first part if you touched on this or not, but all the money that Jeff's raised to date has really just been from family offices. That's his whole
That's
connection,
right.
right?
I
He's
forgot to talk about that. Yeah, please.
yeah, he's only ever really raised from one or two big check writers in every fund. So what I said is, hey, what if we can work with our
Easy.
LPs?
Like, hey, I just need like 30 million. And they're like, great.
Yeah, exactly. And we have this network of awesome fund managers like Walker that we want to get more access to this because we believe it's a really big opportunity. And it was just a perfect kind of situation where he's not the marketer. He doesn't know how to go and raise $100,000 checks from people or $50,000 in this case. It's a lot of work. He doesn't want to do it,
Right.
but it makes sense, and we're aligned in that. And then we also get to vote on all the acquisitions and all the hedging, on asset management, on strategic decisions of the fund. So it's a true partnership where we're working together, and it's worked out really well.
Yeah, it's great. I also, I've looked at a lot of oil and gas, and I've got a lot of like you, Ben, like there's like so many deals in my inbox that I just don't even have time to look at them. Like now they're coming to me at a rate that I'm just like, I literally don't have time. But every time, and you and I have talked about this. It's like every time I'm looking at a lot of these oil and gas deals, there like there's nothing wrong with having like a depreciation sink or like a write-off sink, so where like
Sure.
I'm gonna, like get rid of my paying any taxes on my income. I get it, but I think that there's a strategy there that a lot of these funds kind of take as the lead approach. Whereas, I sort of already said this, so I was about to say, I don't know if I can say this on broadcast Zoom, but like the problem we're having in Fund Six is it's generating so much money that there's not enough write-offs
Right.
to cover all the profits. So, I mean, like I'd rather have that problem myself. And so, yeah, just this is
Well,
a
it's a great point because I think they lead with that because if you ask the next logical question, which is, well, send me your track record of all the
right,
other drilling you've done, which I've done because I evaluate a lot of these guys. It's not as pretty as they want it to be, if they're
right,
even being honest. And that's the issue with that is you're going to have this super wide variety of outcomes. It could be you go get 100%, IRR. You can
yeah,
do that in oil and gas, but it's also possible you get a 0% IRR,
right.
right?
If I'm
And
selling tax
so
write-offs, it's okay. Everyone,
yeah, there
everyone
you go.
got what
Yeah.
everyone got what they just didn't get the gravy. You know what I mean?
They
Right?
didn't get the gravy. Yeah.
How much has
But
been raised so far for this fund?
say it again.
How much has been raised?
Yeah. So commitments, we're knocking on the door of 50 million, I think 3 weeks in. So well on our way to hit the 75.
Yeah, we've got about 15 to 20% of our $5 million subscription before even today. Just from
Yes.
people calling and talking about other funds. They're like, wait, what's happening? And so
Right.
we have soft commitments coming in, which is great. I'm asking that, just because I want people to understand that it's kind of a now decision. I remember this from the
Yeah.
last time too. It showed up and then it was sort of gone pretty quickly. Um, Let's see. How can we predict cash flow when most oil and gas investments are exploratory?
Yeah. Yeah. I mean, I think you hit on that a lot where we're
Yeah.
we're buying existing producing wells, right? So we have a really good sense of what the production is going to be. And the great thing with this is because the well's producing, the geology is all there, you can model with pretty high certainty what their production is going to be for the next decade or two, right?
Yeah.
So you can model that all in. You kind of build in a discounted cash flow, prediction of what that could be based on current pricing of oil and gas. Here's the whole thing that I don't know if you fully made the big stamp of
I know you came in a little late. It's okay. We reached out to
yeah,
you
so
late.
you might have, but the point I think is really important is all the projections that you saw, even in the base case and everything else, that does not anticipate oil prices being higher than they are today,
Right.
right?
Right.
So we don't want to build that in because we can't control that, but we think the upside's there. So, but we
Yep.
want to make decisions on what we know today. And as you mentioned, we do employ a hedging program on commodity prices, so we can lock in those prices. Natural gas actually has gone up in price of about almost 95% in the past 4 months. So we just locked in some new hedges that are looking really good for Fund
Okay.
Six. So we can get some really great cash flow locked in. And so we have very high confidence on here's the production. We have pretty good confidence on here's what the price is going to be. We sell that production at because we're hedging a decent amount. And then the rest of the unhedged production, we're just riding the market. And we want some of that upside because we think it's there. But with a high level of certainty, we know a pretty good range of what cash flow is going to be.
Yeah. It's like, I've never been in a situation where I'm acquiring a small business and I'm going in knowing that the thing that we sell is expected to go up in value. Like that's never
Right.
happened to me before. So there's this whole other component of like, oh, yeah. Um, So, where were previous similar funds during the 2020 oil price crash? How was that handled, and how would a future crash be handled for this fund?
Yeah. Well, if it happens again, right? So in 2020, prices went negative for a day, which
Yeah.
is kind of hard to wrap your head around. But for one single day, you actually had to pay the midstream companies and the pipeline companies to take the oil and gas away from the well, right? So it was the opposite of what it should be. They should be paying you. So that was a big price shock. There was a huge amount of supply in the system at that point. So it just was a big supply glut, and the markets got way imbalanced. What happened from an opportunity standpoint was it was a great time to be acquiring. So they actually went into acquire mode.
Yeah.
I mean, that was the fun that you showed, which is still unrealized, but they're tracking towards, I think it's a 70% IRR. That's an average
That was
annualized
Fund,
return on a
Fund
time
five,
weighted
right?
basis.
Fund
Yeah,
five in 2020,
but yeah,
right?
fun five.
Yeah.
So that's the kind of opportunity that could happen when those kind of price shocks happen. Now, we don't that could still happen, right? But the great thing is we have the hedging, so that reduces a lot of that risk. But the likelihood of that happening, we think, is much less than it was before because the incentives right now to do new drilling have been severely pulled back than what they were in kind of 2020 when it was, it really was drill baby drill. And Trump's kind of coming back and saying, hey, let's drill baby drill again. And all the producers are like, we did that. We didn't really like the outcome. And we also are getting our wrist slapped, from the environmentalists for doing more of this. So what's the incentive to us? They don't want to do it. So it's a very different market than it was, 4 or 5 years ago.
Yeah. Let's talk about the life of the fund. It's stated at 10 years. How do we think about that? Like, I mean, I mean, how do we think about that?
Yeah. Well, if you like this fund, it's partly because you likely like the thesis of where do we go from here? Where's the opportunity in the long term? And I think that's where a lot of the value can get captured and created is buying in a good time now and selling at a really good time, down the road where the prices have more upside because of the supply and demand imbalance. So if that's the case, we can't control when the market's going to realize the investment thesis that we have, which is prices will likely be higher. We're likely entering into a potential energy crisis, and sellers of oil and gas are going to be the beneficiaries. So let's get on the right side of that crisis. Um, but we don't know when that will be realized in the market. We can't control the markets. These are global markets. So we want to have enough runway in the fund to have flexibility to be able to sell and exit the assets when it makes the most sense. But we also are opportunistic in that we don't expect to hold for 10 years just to hold for 10 years, right? So it's we want to have that flexibility. But if you look at the past history, most of the funds have been exited within 3 years or so. I can't guarantee that's the case for this fund. It might be a different environment, but we would anticipate holding for the full time, unless we're producing 20-30% net cash on cash returns. Who doesn't like that? So it's
Yeah.
there's kind of a
No,
at that
right.
point maybe it's you don't sell because it's too good of
Yeah.
cash flow.
It's one of these where it's also it's a buyer's market. Okay. And if we look at Fund Six, um, at least one of the acquisitions that we've done was from a private equity firm who basically made a commitment that they were doing an exit in 3 to 5 years. So they sort of needed to exit, and reallocate capital somewhere else because that was the sort of promise of the fund. And so
Yep.
presumably they were in the black because of, leverage, or I don't know what else they were doing, but so part of it is that. But on that point, could you talk a little bit about Fund Six has had 3 acquisitions. Could you talk a little bit about, the sellers and what the seller profile is and, maybe why they're selling or how we're able to pick some of these up?
Totally. Yeah, it's a great point. A lot of the funds that we're buying from are private equity funds,
Mhm.
and these private equity funds, they have defined lives of the fund, meaning at a certain point in time they have to exit. And that was kind of what was happening in the first 2 acquisitions, where they were a very large fund. This was kind of some of the legacy assets that they had not sold yet. They are actually a operator. They operate their own assets. This was kind of the remaining non-operated working interest they own. And they had opportunities on the fields that they operated that they wanted to reallocate capital to because it makes more sense for them. That's their core business. And so they basically said, "Hey, what do you pay for this?" And we named our price. It was a good price for us, and for them, it was be able to finish the fund. And I think they made a good return as well. Um, but left plenty of meat on the bone for us to go and continue to develop and get really good cash flow at day one. So that was, an external factor that was causing the decision to sell. I wouldn't say it was a distressed seller, but it was a defined extrinsic factor that was kind of putting pressure on them to sell. Similarly, in the third acquisition we made from a different seller, they were participating in lots of different wells. They had a big portfolio in the similar Scoop Stack region, and they had a $6 million AFE authorization for expenditure that they had to go fund on another project. They didn't have the liquidity for it, and they basically came to us because they knew we had cash and it was a good relationship that they'd known for a while. Said, what do you want for $6 million?" It was literally the conversation. We said, "Well,
What do you
give
got?
us give us partial ownership in these 14 wells that we like, and we'll buy it at this price." And it was at that point in time of 25% unlevered, present value. That's our cap rate, was 25%, which is really, really good relative to historical pricing. So that was the kind of thing where it was, they didn't, to them, it was a small number, but they needed that number. And
Mhm.
we were able to be quick. We solved the problem, and we got a really good deal for that. So those are the kind of things we're going for. Is we don't want to go and bid on like on market, heavily marketed broker deals. That's not what we're going after. We're going through relationships, becoming a strategic partner for these types of funds, going after institutional quality, big opportunities, and not a lot of seats at the table. And so we get a good deal because of that.
Mhm. Do we have an LOI out right now for Fund 7? Meaning
Yeah, I'm,
this.
I'm glad you brought that up because I did want to clarify. We don't. So we
Okay.
have we have an LOI. We don't have a signed purchase contract. So we have
Right.
an LOI for
We're
sure.
under LOI. Correct.
Yes.
Thank you.
We don't have a signed purchase contract, and it's actually not 70 wells. It's 700 wells that we
Oh my
get
God.
ownership in. So we're pretty excited about it. We
Great.
expect to see the firm outcome within a
Oh,
week or
it's
two.
70 million. It's 70 million. No?
It's actually 85 million. Yeah.
Okay. I'm close. I'm in the ballpark.
Yeah,
No,
exactly. So,
the bank
but yeah,
underwriter
so we're
promised
we're we're
you.
talking with them. We put a bid out. We're in discussions. We think we're really close. So it's not locked in yet, but
Yeah.
um, if it's not this one, there's lots of others out there that we're working on. So, but it fits the box. It's a great fairway type deal for us. A lot of upside in the drilling, so it really meets a
And
lot of the
and
boxes.
frankly, when you and I met with Jeff Mohajir a couple weeks ago, I mean, my big question for him was, look, we've got this LOI, but what happens if this deal doesn't close, right? Because to your point, we're
Right.
not in a purchase agreement. And, his answer was very predictable. It doesn't matter if it's this deal or the next deal. It's the time is now. And so if it kind of to your point, if you believe in the thesis, which, I'm going to put it bluntly, all of the empirical evidence suggests this is a great time to be buying in oil and gas. And so that's what we're doing. And that's kind of what Jeff was saying, back to me. Can you talk for a second about, people who are considering investing through self-directed IRA funds?
Yeah, and then this is probably one of the last questions I got. I gotta pick up a kid here soon,
I,
but
I do too.
um,
Dance. I've got like 3 minutes to go get my daughter a dance. But yeah, thank you.
um, yeah, so you definitely can, and that would be a question that you'd reach out to Walker's team on,
Yep.
specifically with the custodian. You have to work with certain types of custodians. But from a tax consequence standpoint, you definitely, it's eligible to invest through a tax deferred vehicle. The thing you got to think about is there may be what's called unrelated business income tax, UBTI, that could be generated because we do anticipate using a small amount of leverage. Now, we anticipate using about 25 to 30% on the high end. So we don't, if it did produce that income tax, that would expect it not to be very large relative to the investment amount that you make. So what that means, you could talk with Walker and his team on the impact on that. From my standpoint, it's not a huge risk, but you got to understand the
Yeah.
implications of that.
The only reason I brought it up, I'm in Fund Six in my Roth self-directed IRA as well as not. So for what it's worth, that's not advice. It's just a point of order. Ben, thank you so much. Being able to look, I'm just going to flatter you for a second. Not only have I, loved your mission and what it is that you guys do, and when as I've gotten inside Aspen funds and seen how you guys operate, it just gives me so much confidence, and I really enjoy seeing how you guys have structured everything. And the sort of cherry on top is that, like uh, working with you, I think that your depth of knowledge, on diligence calls and things like that, you'll go from being very conversational to extremely deep down into the engine and talk extremely knowledgeable about specific cells, in an underwriting model. And it's kind of blown me away. And so like the level in which you understand the things that you're a GP in, frankly, has been surprising to me based on working with other people that operate both businesses and funds. And so just want to throw you a little flattery that way. It's and share that with our community. So thanks for taking the time, and
Yeah.
see you. I'll see you in Colorado
All
next week.
right. Well, thanks, Walker. So appreciated and super excited for you and all the investors to participate with us in this. I think it's going to be a great partnership and a really great opportunity. And yeah, the momentum's there. So if you're interested, definitely reach out to Walker and his team. We've got spots filling up. We've got a couple of our share classes already full right now, or there's not even any room left. So this is really the only way to kind of get in. So yeah, exciting stuff. So thanks so much for bringing me on, Walker, and looking forward to talking more.
Thanks, Ben. Talk soon, man.